Hey, Adrame.
Yes, hi, Mera, how are you?
Good, you? So I have like 12 people that are, wait, do you want me to make you host or should I wait for Aliu to arrive?
You better give Aliu the host. He's not yet here.
So I don't see him in the people in the waiting list. I see Khalifa. There is a
Okay. Allow them to come in because we start in 2 minutes. I don't know why. I mean, okay.
So who are the speakers? The people that I have here in the waiting room are Hassan Mibach. I don't know.
Yes.
I should admit him. Let me see if I can make you a co-host and you can see who to invite, okay?
Yes.
Okay, I made you co-host.
Okay. Okay. Adish. Sanjab. Milan. Tommy. Oh, merde. Okay. Hello, everyone. Okay, I think we'll just admit everyone and then we'll start.
Hello?
Hello.
Hello. Hello, Angela, how are you?
I'm good. How are
Can
you?
you hear us? Let me...
I'm doing good, thank you.
Let me unmute. Hello, everyone. Ali, maybe I will let you. I think we'll start in like 2 minutes.
I think we can.
Everyone is
here. Yes. Hello, Adi. How are you?
Adi, hi.
Can you hear me well?
Yes, I can hear you.
Abadu, can you guys see me?
Yes, we can see you, but we can hear you.
I can hear you. I can see Khalifa. There's a big smile.
We all know why Khalifa is always smiling. Don't worry.
I'm laughing at you. Yes. Okay.
So, just to check. Tommy, are you here?
Yes, I am.
Okay, great.
Hello?
Hello, Pop.
Pop is here. Okay.
Am I, you can hear me?
Yes.
Yes, we can hear you. We can hear you, Pop.
Okay, let me go like this. Just a minute, I'll get the video.
I think we can start. Aliu?
Yes, Adrame.
Yes, yes, yes.
Hello, assalamu alaikum, everyone.
Okay, I will start. Aliu, can you just try to mute people that are not panelists?
Yes.
Yeah. We are very, because we are many people, so we need people that are not panelists. Okay.
Okay.
Webinar. This is the first online event. You cannot hear me.
We can hear you now. You're unmuted, Adrame.
Okay. Sorry. So I was saying good afternoon, everyone. Okay, thank you. Good afternoon, everyone. Thank you all for joining this webinar for this important topic. This is a very special event for us, again, a very important one, because this is the first online event we are organizing and the first one open to the public, entrepreneurs, supportive organization. We did few events that we organized for our angels, our members, but this is very special. So welcome to everyone. I would also like to thank, of course, our panelists that make the time to join us, the ITC and YEP team that supported the initiative since the beginning. Before I get into the topic and our panelists that introduce them, I would let Aliu maybe introduce a big game very, very briefly and our key members.
Hello, everyone. Good afternoon. Thank you very much for joining us. I think, as Adrame mentioned, if you are a participant, please, I think we'll arrange to, as the host, we'll be able to mute you, but please just mute your speaker so we can just allow our panelists to be able to unmute themselves. So that's just a quick point. Again, thank you very much. So this is the first webinar series that's been hosted by GAME, which is a recently founded Gambia Angel Investors Network, started in July of 2019. So it's, a partner to the African Business Angels Networks, which is a series of angel investor networks that are being formed all over Africa. So we've been operating now I'd say almost a year, have a few milestones. So now we are officially set up. We have 13 founding members. 2 of them are part of this panel today. We're hoping that maybe some of our other panelists will be able to get them to join. And really the objective of, and then, the other members we have, I think some of them are very well-known names in the Gambia. You know, the chairperson of the board, Mrs. Ami Bensouda, is one of our members. Mr. Idris Amas Job of GCCI, Mr. Aliu Seka, GCCI, Miss Awa American, Miss Safindu Job, Abdullah Baks Toure. We have Mr. Musa Jan, investment banker in the US, and we also have another few young representatives, Mr. Hussein Dia, Mr. Khalifa Fall. So we have a good mix, both men and women, And the objective really is how can we get long-term capital to our companies and our startups in Gambia. And not only that, but also kind of help to prepare the stage and help these companies so that they know what it takes to attract long-term capital. So even if they are not in a position that they can raise capital from gain, we hope to be able to make a long-term impact in how entrepreneurs build their companies to make it very possible for them to attract investment. So if it's not gain in future, really hoping to set the stage for the development of the capital markets. So it's a very important work. And here we have some very important partners, ITC, we have ABAN, GCCI, GAIPA, who are supporting this very important initiative. And we have my colleague and I, Mr. Adrame Ndion, who are leading the charge for now. So I think those are just a few words. Thank you very much for taking time to be with us here today. And hopefully this is the first of many webinars and seminars, etc., that we'll be hosting. Thank you very much. Adrame, I'll hand back to you.
Yeah, thank you, Alu. Thank you so much. So today we'll be talking about investment decision-making and liquidity management during a crisis, a very important topic for every organization. I think you all heard the adage or saying, cash is king. So we are going to talk about cash today. We'll have, let's say, briefly 45 minutes for we will ask questions to our panelists. And then after these 45 minutes, we'll open the floor for our audience to ask questions. So if you have questions, you have on your right chat box where you can write them down. We'll take them and then ask them to our panelists once we finish the first part of the session. So just allow me to briefly introduce our panelists. I will start with our guest, our non-Gambian guest coming from Nigeria and the UK, Tommy Davis. Tommy is a Nigerian British investor, speaker, author, entrepreneur, philanthropist, and advisor to technology companies. He is the Chief Executive Officer of TVC Labs, a technology business accelerator based in Lagos, and also sits on the boards of Sproxil, Striker Entertainment, Technovision Communication, People Prime. Tommy is co-founder of the Lagos Angel Network and founding president of the African Business Angels. I really want to thank Tommy for many reasons. He came to the Gambia twice to support us, to support the initiative, and he's here today. Thank you so much, Tommy, for being here. With no particular order, I will introduce the other panelists. Papa Yusuf Njai. He is the founder of the unique group of companies, which includes leading ISP Unique Solutions. He has passionately driven the strategic agenda of Unique Solution for humble beginnings to its status as one of the leading ICT service and solution providers in the Gambia and the sub-region. Papa Njai serves as chairman of the Access Bank Gambia, director of the Gambia Submarine Cable Company Limited and GamSwitch. And then we have Khalifa Fall, CEO of KMF Technology and also GAIN member, Angels. So he's part of our network. Khalifa is a software engineer with experience in major programming languages and new network technologies. As an entrepreneur, he started a technology company with just $200 US and is today one of the most popular tech company in the country. And it is still growing. We also have Nilan Senghor. Nilan began his career as an auditor with Deloitte and Touch in 1999. She climbed the ranks from an audit trainee to a senior audit manager within a short period. In May 27, Nilan left Deloitte and moved to Trust Bank Limited as the general manager in charge of finance, administration, and human resources. In July 2016, she was promoted deputy managing director and executive director of the bank, of the board's bank. We have Hussein Jab. Hussein is the AfriCell Gambia Chief Operations Officer and also GAIN member, a member of our Angels. After his graduation from the UK, Hussein returned back home and set up an IT consultancy firm with a partner before joining AfriCell Gambia in 26. Initially as an IT engineer, Hussein rose through the ranks and served as IT manager, IT and billing manager, information system director, and currently the chief operation officer, second to the chief executive officer. I will finish with Adjatu Conte, we called Adi. Adjatu is founder of Daraja Boutique, I guess you all know, a business that specialized in African-inspired bespoke and customized handmade leather bags and apparel. Daraja works with local artisans in the Gambia and Senegal by sourcing and producing authentic handmade leather products. Daraja also works with a group of local women, tanners, that manually process a majority of the leather produced in the Gambia by buying locally tanned leather. So thank you all for accepting our invitation. Our goal today is we want to get out from here with solutions for everyone, for entrepreneurs, for investors, for everyone. So my first question is a generic question to all of you guys, the panel, of course. Could you briefly explain the impact of the COVID-19 crisis in your line of business? Really briefly, we'll be focusing more on solutions. So let's start with Adi. Ladies first. Adi, you have to unmute your yeah.
Me also. Yes, so I've definitely been facing quite a few challenges. I had to figure out how to navigate through this pandemic, being a non-essential business in the creative industry. And that in itself posed a challenge for me. As a retailer, I had to shut down my doors to prevent the spread of, to help in preventing the spread of the virus. Consumer spending habits have changed because the priorities of people have shifted and they're focused more on essential services. Maintaining a steady income or maintaining revenue has also been a challenge, as most of my customers, apart from my local customers, my customer base mainly are a lot of tourists that used to come and visit, and a lot of the Gambian diasporans, which as of now, they haven't been able to come due to cancellation of flights all over the world. So these are just a few of the challenges that I've been facing.
Thank you, Adi. Maybe I will ask Papa Yusuf Njai to tell us a bit more about the impact of the crisis in his line of business. Yes, maybe just.
Am I audible?
Yes.
Good afternoon, and thank you for having us. I think you're asking us a very loaded question. Every day is very different. With COVID-19, you know, and I want to believe that the impact of the business goes beyond the business itself. Remember, when you have a lot of staff, which we do, you're also worried about the safety of the staff. So I want to believe that over the last 3-4 months, not only have we been grappling with challenges in the business, as everybody knows, but we've also been looking at how best to keep our people safe. You know, and I want to believe that our culture, everybody knows social distancing is a challenge. So I want to put the human factor first. That has been a very difficult challenge. You don't control what cars people get into. Yes, you provide transport for some of the team, but others you cannot. They go, they come back. So that has been really challenging. You know, the culture of getting people to wear masks, use hand sanitizers. And of course, if the people are not healthy, then it has a direct impact on the business. So on the business, again, you are not, what's the right word to use? You are not an island. Adi has talked about her industry. Probably she has a connection, an internet service connection with one of the providers. How is she able to pay her bills? So in as much as our, in the ISP, for example, we have a lot of demand, but of course, demand doesn't necessarily turn into revenue, because the same people you're dealing with are also having their own challenges. When I talk about energy, we have a few projects for unique energy. The installations have reduced because you also don't want to expose your team to the environment. So you can imagine what is happening in that vein. You can't deliver according to what you want to do. So your project timelines are also affected. I'm sure I can go on and on, but maybe I'll stop here for now, just to give you an idea that it's not only about the business, the people are also affected. Thank you.
Thank you so much. Nilan, what can you say? The banker.
Hi, everyone. Yes, COVID-19, I think we can all agree, from households to large corporates, I think everybody is affected in one way or the other. I'm not even going to talk about things that we already know. And these are things like WHO protocols about health and safety. We have concerns about how to keep our staff safe and how to keep our customers safe. I'm not going to talk about that. I think we all know those things. The biggest impact to my sector is credit risk. We have a lot of customers, from startups to large corporates, who took financing from the bank. And now all of a sudden they've been caught in a situation where their cash flows have literally dried up overnight. So now there's the challenge of trying to pay off their facilities and at the same time try and keep their businesses running in whatever form, because they need to get these businesses back up and running after COVID-19. So the biggest risk to our sector is really credit risk. There's a big chance that a lot of loans will get to non-performing status, and that has significant consequences. There's consequences on earnings, bank earnings, because if we make provisions for loan losses, it affects profitability, it could affect the bank's capital. So the entire industry is really at risk, and that's going to be the biggest challenge that I'll be talking more about later on.
Thank you, Nilan. Thank you. Khalifa? Maybe if you can.
Unmuting myself.
Yes.
Can you hear me?
Yeah, we can hear you.
Yes. Good afternoon, everybody. For COVID-19, like Nilan mentioned, they're the basics that if we have to discuss, we all share a common problem. And but for our tech industry, from my company's perspective, we looked at it from certain angles, and we said, you know what is the immediate impact? What is the short-term impact? And what is the long-term impact? We all know that technology plays a key role in every sector, which is a catalyst for everything. So my line of business is more of a capital expenditure business, where institutions invest in infrastructure that maybe they've planned over the past year through budgeting. So especially government is one of our biggest clients. So for them, I don't think much changed with their expenditure. So we've noticed a steady flow in maybe contracts that we've been getting, but also looking at the long term, how in the future is government going to react to this pandemic? Obviously, they've lost a lot of revenue in terms of taxation, and businesses are not going to pay taxes if they don't earn money. So what policy is government going to take? Are they going to drastically reduce spending? And this is how we see it affecting some of us, which will be a lot harder than the short term. So we don't know what government decision is going to happen, whether they're going to say, you know what, we're going to still stick to technology, we're going to continue investing into technology, which I believe is the right thing to do to be able to get us out of this situation. If that is the case, that might be a good situation for my line of business. I'm sure Pap can also elaborate on that. Another thing that we face, obviously, Nilan touched, is that we have a lot of outstanding debt in terms of our clients that are supposed to pay us, but obviously cannot pay. We also have obligations to fulfill to our financing partners, and we're also struggling equally. So it's very difficult finding the balance and also managing the little cash flow that you get, because government contracts to even process a payment takes a certain amount of time, normally when all things are good. But then considering the fact that they have people working from home, it has to go through a bureaucratic process. So this has extended even our anticipation of when we can even have cash. So we find ourselves depending on the banks, and that reduces significantly our margins on contracts, and also a lot of interest rates as well. So I'll just stop there, and then maybe we'll get to talking about more. Thank you.
Yeah, thank you, Khalifa. Very interesting insights. I would go to Hussein Jab. I don't know if you can hear us. We don't see you, Hussein. Okay.
Adrami, I can hear you. I've been here the whole time.
Great. I was about to move to Toby.
But can you see me?
Yeah, no, we can see you, but it's fine.
Okay, that's strange. It's showing me here that my video is. Anyway, thank you, Adrami. And I'll just touch a bit on what most of the panelists have said. For us, COVID-19 was an interesting period, because aside from the fact that we got to learn a lot, there were a few things that we came to realize that were not expected. I remember just in the beginning of the pandemic, I read a news article that I think Vodafone UK, or one of the MNOs in the UK, like experienced like a 30% surge in their traffic. And a lot of the operators were anticipating like a huge surge in the amount of data volumes that they transit through their networks. Like Africell being a huge a company that's part of a group of companies, as you know, we have operations all over West Africa and East and Central Africa. We had to put heads together, and one of the things we did was we put together like a contingency plan on how we can, on a very short notice, like increase the capacity of our networks to cater for this like unexpected surge in traffic. Yes, in the beginning, in the first couple of weeks, there was definitely like a surge in traffic as everyone wanted to go online. Everyone wanted to be connected to know what was going on in the rest of the world. However, Africa is, at least our part of the world, is a different dynamic. Most of our revenue is generated from pay as you go. People pay for what they use. They don't pay for like an internet connection, like one-off, and they get to use it. They get to use as much as they want over the month. So people have a limited like disposable income. So like naturally, when people's pockets start to get hit, they tend to change their spending habits. So we did notice a slight decline in our revenues, which was normal. Eventually putting the African dynamics into play. However, on the flip side of things, also being a telecommunications company and providing internet and data services, like many institutions flocked to us to be able to provide them with bandwidth and connectivity so that they can do things like this, like what we're doing now. I mean, from the government, from private companies, we had a huge increase in the requests for connectivity. So I suppose that kind of had some sort of a cancelling effect on the positive and the negative. We didn't see too much of a downside in our revenues. It kind of equalized, although there is definitely a slight dip. But we got to learn a lot over time through the pandemic, and I guess later on as the Q&A sessions come in, I'd like to share with you more some of our experiences, some of the good that came from the bad of COVID-19. So thank you. I think that's it.
Thank you, Hussein. So Tommy, what would be your insight on this question in regard to your hello, Tommy?
Sorry, yeah, there you go. I'm here, don't worry.
Yeah.
Well, I think what I would like to do is actually take a slightly global view as to the impact of what we're seeing with COVID. The first is and some of the previous speakers have spoken to fragments of this. The first is the fact that we've got declining consumption. Okay, restrictions on movement. We don't have any airline industry to speak of anymore. Then you've got social distancing and lockdowns kicking in is one of the contributors to that declining consumption. Then you've got poor expectations of future income for quite a number of people. And even those that do have the wealth, there's the erosion of wealth. You've seen the value of assets such as shares just decline. So you're seeing a decline in consumption. Then you come to our industry in investing. Again, there's declining investment. Why? Of course, uncertainty discourages forward-looking decisions. You've got poor expectations of future profitability on investment spending. So people are more than likely to, just hang on to what they have for now. We're seeing increasing government expenditure. Okay, there's expansionary fiscal policy, and inevitably they don't have a choice. There's an increase in healthcare expenditure simply because they have to. And finally, especially pertinent to my home country here in Nigeria, is the declining in net exports. We've seen what has happened to oil prices. We've seen what's happened to supply chain disruptions. So the ability to export is therefore reduced. And in our case, we've got a border closure issue, which complicates it. So, I think those are the underlying things we're seeing that are manifesting in the stories you've heard from the previous panelists. I trust that helps.
Yes, that helped very much. But on the particular investment landscape on Africa, what can you say in terms of impacts?
Oh, I've said it. It's declining. We're still doing. We've just closed a transaction. We're jumping on another one and starting to do due diligence on it. We're not stopping, but the type of opportunities we're looking at are totally different. So the best way is to share a story of the last transaction we did without giving any specifics. And I think the press release actually just came out today. Is in Trove Finance, which the reason that particular transaction is extremely attractive is because it allows Nigerians to actually invest in international markets. So it flips it on its head, giving high net worth individuals a currency risk mitigation for their assets. So there are opportunities out there that people are still dying to invest in, but what they are is what has fundamentally
I think, thank you, Tommy. At the end, we did not hear you, but it's totally fine. Thank you so much. Pabnyai, can you a quick question for you? How can the local companies? Hello.
Yes, Adrame.
Yes, Tommy. Just.
Yeah, welcome to Nigeria. We just had a power outage.
Yeah. Sometimes, it's all over Africa, so no worries. Pab, I was asking how can the local companies better integrate technology to drive competitiveness, in your opinion?
Yeah, thank you, Adrame. Not only in Gambia, but across the sub-region, we've seen how companies are innovating, and of course, technology is in the forefront. I give a perfect example here in the Gambia. We have a couple of customers who are basically closed their businesses in the beginning, but they realized that this was going to be something that we would all have to live with, as we know. That's the way it's going to go. So, for example, the school teachers, the schools that we are connecting, immediately decided to jump into action, of course, with our support. So basically, school fees that they would have lost because parents wouldn't pay if the kids are sitting at home doing zero. So the schools innovated, we worked with them. Google Classrooms became the order of the day, and Zoom, of course, and I'm of the opinion, WhatsApp learning, because connectivity is a challenge in terms of cost. So we have a lot of smaller tutors using connectivity at home to do voice notes for the students, and the students send back. So on the education sector, I mean, we've seen technology come and really really rule. In the Gambia, for example, the government is doing a radio program. Of course, there are critics how many people listen to the radio, the issue of power. I think our colleague from Nigeria just talked about power going off. So we do have these challenges, but people are using it. We also have people sending restaurants, for example. I wouldn't name names, but people are using WhatsApp and apps to make sure that food is ordered. Otherwise, the restaurant would have closed, because it's still difficult to go and sit in a restaurant and not be exposed to COVID-19. So we've seen some of these restaurants. I've even seen hotels in Nigeria. I think the famous Eco Suites is doing deliveries on the restaurant is open and things of that sort. In Senegal, for example, the tailors during the Eid festival, you know, the tailors were taking orders online, you know, WhatsApp, you know, measurements, and sending it out. And Senegal has a huge culture of delivery, you know, so people are on their motorbikes using it to deliver and things of that sort. And I read a New York Times article a couple of days ago, and something really intriguing, Adrame. I'm like, as you say, how can we leverage technology? I think if you look at it, do we really need to be in the office? I think for me, that's the $1 million question. Yes, for some industries you do, but for entrepreneurs, your biggest cost at times is human resource capacity. You have a huge number of staff, they're shooting up the electricity bills, the air conditioners are on and things of that sort. But I think COVID is teaching us that if we harness technology the right way, we don't want to make people lose their jobs. But right now, as we rightly say, I know we'll talk about liquidity, one of the things you need to do is to cut down costs. And I want to believe that connectivity technology allows us to do it. But of course, you have the challenge also of culture. Are we used to really working from home? That is a very new culture in our part of the world. For some of us, it's normal. But for most people, the government workers and all that, if they work from home, are they able to deliver services that otherwise they would be able to deliver when they're at work? So in a nutshell, I think the leveraging of technology allows us to do so much more during this time, and of course, later on. So definitely, it is a game changer at the moment.
Hello, Adrame. If it's possible, I'd like to just have a follow-up question, but addressing this to Mr. Hussein Diab is just to really pick on the point that Pap was mentioning about this long-term impact, particularly on, you know, alternative work arrangements in Gambia. You know, because for Africell, for example, is one of the bigger employers in the Gambia, and during this COVID-19, you know, a lot of staff had to work from home. So for me, I think it's an interesting question for somebody like, and this is directly directed at Sign. Do you see COVID-19 leading to new operating models such as alternative work arrangements, you know, in Gambia, in your sector, and using your company as an example? Is this something, a trend that you can see being built out over the future?
Yes, thank you, Badu, and thank you, Pap. Actually, Pap said it all, really. You know, when he was talking about it, I was smiling because, and that's what I meant when I said that, you know, every gray cloud has a silver lining. COVID-19 has actually taught us to really look back and assess ourselves, and definitely we have had to look at it. I think that the world is never going to be the same again after COVID-19 because we have actually come to question what really is important. I even see on the news that there's some companies right now out there that are even offering in some countries, some companies are now offering staff to carry on after COVID-19 to work forever from home. Like Africell, for instance, we have over 500 employees. And one of the first things we actually did at first was to cut down, we made 70% of staff to work from home. This is staff that can work from home. And, you know, after doing that, you know, we came to, obviously it was a bit of a slight culture shock, you know, because people are always used to, you know, the irony is that being a technology company, we never really use too much of teleconferencing and online meetings. So it definitely showed us that most of the things we do, especially with firms like us, can be done from home. And we learned a lot from COVID-19. And it is definitely going to result into long-term changes in the working model, in the working place. Also, we have to revisit our general company hygiene policy, for instance. Like nowadays, we have we've had to up the game on how many times the cleaners come into the offices to clean the environment. We actually even did something which is very crazy. We've totally because we leverage on our experience in Sierra Leone. Sierra Leone 2014 had the Ebola outbreak, so we actually took some of the lessons that Africell Sierra Leone learned, and we had to incorporate it into the workplace. And I know it's going to sound funny, but we've installed special, we call them foot handles on the doors. So, one of the fastest ways of virus spread is from door handles. So we've actually, if you come to Africell now, to our head office, you see that all of our doors have got like a foot handle, which is we've modified the door so that you can just press the foot and open the door and close the door. And, something like this is, I know it sounds small, but it's a classic example of how COVID-19 is going to change many aspects of the work environment, not only us being in the office, but actually how the office itself is operated. So I strongly believe that, and yeah, definitely I agree. Thank you.
Thank you, Hussein and Pap. I think this crisis will change, is changing all the way in different industries, in many, almost all the industries, the way we are working and will keep working. A quick one for our banker, Nilan. Banks are well needed when we are in this type of crisis. Companies need some money in short term, in long term, some liquidity, etc. What solution did your bank did or put in place to support these small businesses, startups, SMEs to overcome this shortage of liquidity?
Thank you, Madrama. We have different solutions. It just depends on everybody's needs. We have some customers that already had loans and they had structured monthly payments that they can no longer afford to meet. So for those customers, what we are offering them is payment holidays so that cash flow wise, they don't have to worry about servicing their bank loan at the moment. That can be deferred to a later date when their businesses are back up and running. We have some customers who are still getting some cash flow, so because they're operating at some level. So for those, they don't want a complete payment holiday because at the end of the day, they also have to try and manage the interest that they're paying. So what they want is reduced payments to restructure the facility over a longer tenure. And we can do that as well. We have done that for a few. And some customers did not have loans. They were running their businesses without facilities. But right now they are caught in a situation where they have running expenses, operational expenses that need to be taken care of. We have schools that have to pay teachers, but there's no school fees, so there's no income. So for those, access to credit is available. One thing I can say about the Gambian banking industry is that it is highly liquid. And in addition to that, what the central bank did recently was to free up some more liquidity to allow banks to be able to lend. Although we keep saying that even that without that, the banks still have sufficient liquidity to be able to lend to customers. So the support that our customers need mainly is credit related. And what we say is, just as you would go to a doctor to tell them what your problems are so that they can diagnose and find a solution, that's what we encourage customers to do, because your problem could be very different from somebody else's problem. The kind of support you need could be different from what somebody else needs. So what we encourage is that the customers come and tell us how COVID-19 has impacted their businesses, and we can help. Sometimes they just need financial advice, whether it's a loan or it's an overdraft, it's a long-term facility, it's a short-term facility, or there's other ways that they can help their businesses survive during this period. But yeah, so basically, in terms of financing,
I will be the, let's say I'm an entrepreneur, and we know in Africa that it's very difficult for banks to give loans, and even when we are in a crisis, to even give kind of short-term, financing. Precisely, did it, and what an entrepreneur need to have, or to access to those short-term liquidity solutions?
Yeah. Have we been giving loans? Yes, we have. To entrepreneurs? Yes, we have.
I mean,
But you're right.
in this crisis.
Yes.
Yes.
It is difficult to access loans, though. That part I will agree with. The reason for that is because startups are usually very risky, I mean, by their very nature. And what we're doing is we're taking depositors' funds to lend to you. So there has to be some sort of responsibility attached to that. So we can't just lend to somebody on the basis of an application or on the basis of collateral. So we need to make sure that you have the capacity to pay. And that is something that may be very difficult for a startup to demonstrate. But where you present a good business case and you have documentation and financials and forecasts and business plans and paperwork that we can look at in order to facilitate a good credit assessment, then yes, we do offer financing. The reason why people think credit is difficult to access here is because we are not, I'm trying to think of a diplomatic way to say this. We are not very good with documentation as startups. We have plans in our heads. This is what we need to do. But have you really looked at your market? Are you sure that when you borrow, you will have the capacity to pay? Because there's no point in going to the bank and getting a bank loan and then running into difficulties later on. You can't pay it. The bank will have to foreclose on the facility. You lose whatever little asset that you had to deposit as collateral to begin with. So it would be very irresponsible on the part of any bank to lend to you without making sure that you are creditworthy. In the more developed society, you have things like credit scores and so on to help banks, guide banks' decision. Unfortunately, in our market, that doesn't exist. So you come with a brand new company that nobody has heard of, and there's no way of doing assessment to find out whether that business is creditworthy. You, even as the individual, there's nowhere we can go to find out whether you have the capacity, the credibility, the character to be given a facility. So really, it is a very difficult thing to do, especially for startups. But because we have done it for a few, I can tell you it is doable. You may not be able to access credit from day one, but maybe after having worked with the bank for a period of about 6 months, we usually use 6 months as the yardstick. We are able to guide you and support you in such a way that you will be able to put in place the things that you need to put in place to be able to apply and access credit.
Thank you, Nilan. I think we can keep talking about how banks treat small businesses. It's a very interesting topic. For the people that want to ask questions, just write them down. I saw someone that raised his hand. Just write down the question and we'll address them later. We talked about banks. Now the equity side. Tommy, did you keep investing in this during this crisis? Yourself as an investor?
The answer is yes, and I've just heard of an amazing opportunity in Gambia. Now, you don't have credit scoring. That's a service the banks would love to have, and we have, actually, I don't know if you've ever heard of Migo. Migo is one of our investments. That is the small lender, small cap lending that they actually do. And they perfected that to the point that they're now looking at expanding to Brazil.
Mm-hmm.
So, amazing opportunity. Thanks. Is it Nijilan for sharing that? For those startups listening in fintech, fintech is red hot. Just imagine trying to do credit scoring for Gambia, Senegal, and pick one or two others. And that could be a very interesting proposition. In terms of are we investing, the answer is yes. In fact, as I'm talking to you, I'm in the middle of putting together a syndicate for an agri-tech play that we think is quite interesting. A few days ago, we closed the deal on a fintech, which I think Disrupt Africa will probably put a piece out in the next few hours about, because it's the first cross network deal. So we saw the Lagos Angel Network, the South-Southeast Angel Network, and the Diaspora Angel Network actually partner in this particular deal, which is a fintech that actually allows and enables Nigerians to actually trade or invest in shares in the New York Stock Exchange or the Chinese Stock Exchange, or even the FTSE. That was totally unavailable in the way they've provided it. So we think it's an exciting opportunity. We see increasing opportunities in logistics, especially home delivery logistics, given that the post-COVID era is still going to be very, very home-centric as opposed to office-centric or social environment-centric. Tourism is going to undergo a lot of systemic changes. So the nature of restaurants, for example, are going to be interesting ones to see how those of us on the continent in high friction, high touch environments react to these scenes. So the long-winded answer to your question is yes, we're seeing opportunity. We've also seen an almost 40% reduction in the value of our existing portfolios. So that hit has become very, very manifest. How do we know it's up to 40%? Those that are doing follow-on rounds are actually being asked to either stay at their previous valuation or to reduce in one particular case, they're even asking for a reduction in valuation. So that's how it's manifesting from an investor's side. So we'll be seeing a lot of dilution as new money comes into those kind of ventures to keep them going.
Thank you, thank you. That was the second question on the first one. Khalifa, I will come back to you. When a crisis has significant financial impact, how can you adapt your business model to reduce costs both on the short term and the medium term? I know you received investment from a corporate investor. It would be good to share what did you put in place, and also the relationships you have with your corporate investor. Yeah, please. We can hear you.
You can hear me?
Yeah, now it's good.
Okay. The most important thing is the investor-investee relationship, and usually it goes beyond a term sheet. I'm also glad to have a relationship with Orange, and our relationship is really beyond that. So far, we've benefited. Orange has brought in vast elements of learning in terms of technology and the business sides of telecommunications. We've also looked at some really rigorous growth strategies, cross-collaboration between my other company, KMF Technologies, and Orange Business Services in Senegal, where we are tapping a lot into the existing skills base in terms of manpower to execute projects in the Gambia. So we also have we have a shared vision to disrupt, markets. So that plays a key role in the way Orange Gambia is going to unfold. That's one part of your question. And then the other part of your question is, can you just come again with that question?
Yeah, I mean, the first part was more about how you adapt your business model to reduce costs both and so.
Oh yeah.
And the second part, it's linked to the first one, but more as an entrepreneur and a small business. I mean, small, it depends what we are talking about, but having a corporate investor that invested heavily in your business, how did you manage? How do you manage your relationship with them in regard to your adaptation of your business?
Yeah, in terms of managing the relationship, it's just to always make sure that you keep in line with what your agreements are. Our situation is a unique situation because we're still going through processes of validation from government. So what has happened during this COVID is that it has created more of a standstill. But also we've been working with suppliers and different stakeholders in our business to be able to get ready as soon as things are open, we should be up and running and ready to go. So in terms of my business, looking at the COVID situation, first of all, we said, what response are we going to take? Okay, there was a risk anxiety where you say, okay, how much worse are things likely to get? And then how long is it going to last? The growing pressure to do something often produces a variety of uncoordinated moves in terms of taking the wrong decisions or overshoot the right decision. What we looked at is that we strategically analyzed all the possible situations to say, what should we do drastically? Should we let all our staff stay at home? Or should we take a decision which is more measured by sending some and keeping those that are, I would say, people that we actually are critical to our institution? But again, as Shine and everybody else mentioned, you get to find out that, you know what, every job can be done from home. Just maybe those that need to visit offices you need to cater to and stuff like that. So, you know, it's always also important to not miss significant opportunities, which is nested in among the bad situations. So we also crack our brains to figure out what are now our clients' needs. How can we tailor our services towards what the client's needs are? So that is one way that we did to help our business in that aspect.
Okay, thank you, Khalifa. Adi, you have been hit very hard due to your dependence, the dependence of your business to the tourism sector. How do you plan to recover from its aftermath? Adi? Let me unmute you.
Okay.
Okay, we can hear you now.
Yeah, like I was saying, the tourist sector actually plays a very key, vital role in my business because a lot of my customers are actually tourists. And because right now there is a standstill all over the world, it has really affected my business. I mean, this pandemic has changed the fashion landscape, and these issues, for me, is going to be likely to be something that's prolonged because, as we've been seeing, the ban on flights has been extending and is extending, and we don't know when the world is going to be opening back up. For me, what I've been doing more is trying to focus on solutions to sort of go past these issues. And for me, the main solution has been going digital. And I think this is something very important for retailers, especially those that are in the fashion industry, young African SMEs. Going digital is very, very important, especially during this era. And in going digital, what I mean is focusing on having a strong online presence, focusing on using e-commerce platforms, which is something that I've been using right now. This is very important because I feel sometimes, like Africa, sometimes we are sort of behind when it comes to going digital, especially here in the Gambia. I mean, the e-commerce platform is something that a lot of young Gambians can be using in order to sort of boost, to help them boost their sales right now, because like we were saying, one of the problems is right now a lack of revenue streams. So I had to sort of look outside of the box to sort of determine, okay, now that I do not have my my tourist customers, my customers from the Gambian diaspora, what can I do to sort of maintain those customers? So one of the things that I had to do was go e-commerce and just maintain a very strong presence, which has been working for me. And I think that definitely it's been helpful.
Okay, thank you, Adi. We just finished our first 45 minutes, so we still have 45. I mean, less than 40 minutes left, actually. So before I open the floor, I would just like to ask you all maybe one last question. To me, working in this African landscape of investment, etc., what do you think are the most important lessons from the COVID-19 crisis for startups in Africa?
Apart from you can't predict the future.
Well,
no one can really predict the future.
Hello, sorry, Tommy. My apologies for jumping in. I just want to, please, while you're answering that question, I just want a kind of related question in terms of also the long-term outlook for angel investors. Do you think like a crisis like COVID-19, it changes the outlook for people who are interested in investing in African startups, et cetera, et cetera? So if you could also address that as well.
Well, definitely, very definitely it does, because if you look at funding has essentially dried up. What do I mean by that? Well, historically, you know, everybody knows the game. We want Africa's minerals, therefore, you know, we'll do whatever it takes, even if it means investing a little bit here and there. But unfortunately, COVID-19 has brought us into this global situation, excuse me, where we're starting to see the rise of nationalism, you know, where people are sort of concretizing around their borders. So that we can expect to have a significant impact on startups. But I think we need to also separate startups from SMEs, and that's a mistake we are constantly making in a lot of the conversations we're having. SMEs are not startups, and startups are not SMEs. Until we separate the two, startups are high growth, they're moving so fast it's blinding. They fail fast and they succeed very quickly. It's black and white for startups. SMEs are the backbone of society. To get to the banks, the risk profile is known. If you go to a bank and say, I want to do a bakery in Bamako, they know exactly how many people are in Bamako, how many bakeries are in Bamako, and the likelihood of your success. A startup, on the other hand, by its nature, is doing something you don't have any measure. That's why people like us exist as risk takers who benefit from the few that succeed. So as long as you understand that this is about high risk, high gain, then this is just an additional complexity into what you're already doing. The example I give, you're familiar with this story, but in Lagos, Nigeria, last year, one of the biggest investments that was going down went into bike hailing services. So where quite literally motorbikes could pick people off the road and take them to where they needed to go, using mobile telephones and location-based services to actually get the pickup, just a la Uber. Then early this year, the state government steps in and says, you know what, that's illegal. None of you can do that anymore. Now we're talking of anywhere from $30 to $40 million worth of investments that's already gone into this. COVID hits, there's a new opportunity. These guys are now providing the delivery logistics for restaurants and pharmacies in the same city. So the point I'm trying to make is startups need to be cognizant of the context in which they're operating. And that context will include issues like pandemics. But startups, by their nature, are already designing for extreme uncertainty. That's why you have things like the lean machine methodology for product development. That's why we have agile, okay, for business development. That is the nature of startups. Uncertainty and issues with startups. With SMEs, on the other hand, the measures that I talked about earlier become crystally challenging. Liquidity is going to be a serious problem because you've got declining consumer consumption. And because there's declining consumer consumption, you're not going to get as much money in, which means you can't meet your own obligations. And when we start to look at your liquidity ratio, which is your liabilities to your assets, you run into trouble as an SME. And SMEs therefore need to be cognizant of the fact that they need to have a cash okay, cash expenditure reduction mechanism in the first instance, while also making sure, okay, that any kind of inbound cash coming in is accelerated. So instead of 90 days, can I get 60 days? Okay. If it's 30 days, well, can I get it paid in a week? Those are the kind of negotiations you're going to go around to ensure that your liquidity ratios sort of stay in the semblance of reality. But that's for SMEs. Startups, it's a totally different ball game. I trust that helps.
Thank you, Tommy. I think we are having questions from the audience. I will just finish with one question to our entrepreneurs here, Papa Njai and Khalifa, and also Adi. But both of you, how do you? What recommendations or lesson learned do you advise for our entrepreneurs here? Beside, in addition to what Tommy already said.
Thank you, Adrame. I mean, I think I've run businesses for the past 20 years, and in quiet moments, I kind of reflect, has it ever been this difficult? Has it been easier? And I think one thing that always pops out, because you started with one business, and over time, you have several businesses. So what I'm learning is that diversification is very, very important. Because today, that tailoring shop is not working. But if you have a shop that sells food stuff, that is going to work. Yes, if you follow the auditors, they don't want you mixing incomes and things of that sort. But in this current climate, I personally will tell you that some of the businesses are doing better than others. I mean, we do everything from selling solar panels to selling rice, sugar, to selling internet. So I can talk about what I'm trying to point out here. So what is happening is in areas that, there's a huge demand for those services. I mean, it helps protect against loss of income in other areas. Of course, it cannot be forever because I'm also not advocating for putting money in one business and taking it to the other until the other one fails. But I think on a short-term basis, I believe that diversification is very, very, very important. The second one, as Jilan mentioned, and I think our colleague from Nigeria has mentioned that you have to separate SMEs from startups. It's like the first thing we did was to make sure that we call the bank MDs that, hang on a minute, I have an LC with you, I have an overdraft, I have a loan, whatever it is, I want to refinance. Or my interest rates, can you freeze it for a while? Because I don't know what's going to happen. So I want to believe that the relationship with the bankers is really, really, really important. Yes, I sit as chairman of Access Bank. I can also talk about some of the challenges we're seeing, as Jilan has mentioned. But quite clearly, don't wait for the banks to come to you, because their system, I think our colleague has talked about a credit scoring. In the Gambia, what we have is a credit reference bureau. We don't have credit scoring per se, but the reference bureau allows the banks to look at whether they should give you a loan or not. Of course, it has its challenges, but just to put light that there are things of that sort. So back to your question, Adrame, I want to believe that diversification is key. A great relationship with your banks for them to understand the type of business you're doing and to give you some of these opportunities. And as we all know, cash is king. I am of the opinion that the credit terms that you have with your suppliers, you might not even need to pay them money. These are very practical things. You provide a service that your supplier needs, but barter, exchange, so that at the end of the day, he's not following you for money for a service that he's paying for somewhere else. Of course, you have to give them the right quality, the right service, and things of that sort. So I want to, summarize to say that at this point in time, they tell you that you cannot do capital expenditure because for obvious reason, those cars, office renovation, think there's no travel. But at the end of the day, it depends on what sector you're in. If you have to buy a machine that is going to basically produce face masks that the government is going to buy, I want to believe that that's a capital expenditure. It's worth going in for, because you're going to get a return on investment. Does it make sense to build a new building and just put people in there? Maybe not. So I think what we're also lacking in the Gambia that I would also want to put across Adrame is, even before COVID-19 came, this is my challenge to the banks. I always say that they give you the loan and they don't follow up until the loan goes bad. So I'm challenging my team at the bank and all that to tell them that this is the time to even get closer to your clients, because our culture here is you get the loan, you do whatever you have to do with it. But this is the right time that the financial service sector should get out there, talk to their clients, look at what they're doing rather than them come to them when it's too late. So I think a mixture of all of these things might actually get us to maybe speak again in the next 5-6 months where all our businesses are alive. But definitely the challenges are out there.
Thank you, Papa. And I think on your last point, banks have something to learn from investors, from equity investors, because these guys, when they invest, they keep every month, they keep checking what happened. They don't wait the last minute to react. Khalifa, can you share a few of the lessons learned and what would be your recommendations?
Yes, listening to what Papa said, he said a lot, and I just need to add to that. You know, as a startup, when you are starting a business, we are so confident in, you know, in our ideas that we always forget to look at the eventuality, the extreme eventuality. Like, who would have thought that there would be no movement or restricted movements for a period of more than 4 months? Okay. So as a startup, you need to consider that in your financials. How is that going to affect you? So it is always critical to always think of the extreme eventuality, because you want to think of, okay, what is the good side? What is the bad side? But what is the extreme side? Okay. What is going to happen if everything comes to a standstill? How easy is your business to be able to, you know, maybe to turn into something else? So we've seen in the US where companies, even car makers, were agile enough to be able to, you know, to change their operations into producing ventilators. So these are lessons that startups should learn. Also, you know, you need to be closer to your financing partners. Have them ensure that they understand your business. Pap mentioned it, and I think you cannot underestimate that, because once they understand your business, it's easy for them to adapt to your ideas and to support you the way that you want. Also, exchange of services is also important, but also thinking out of the box. What can one do to survive as a business? Even SMEs like my business, we're looking at different ways. How can we survive and maintain our position in the market? And these are things that you really need to analyze the market, look at what people are needing, and what are the new trends. And so this is what I'll just add to what Pap said. Thank you.
Thank you, Khalifa. So very briefly, because we are running out of time, Milan and Hussein Jab, can you share some lesson learned and recommendations for these young businesses and young entrepreneurs?
I think for us, we've sort of realized that there's a very big gap in the ability of banks to help startups in this country. The way that commercial banks are designed, it's really difficult to address the needs of those who are economically active but don't have access to capital. And we've realized that that is a really, really big gap that really needs to be covered if we are to help startups to thrive. It's difficult for banks now with mounting regulation, compliance pressure, the need to invest in technology because that's what the market is calling for. It's really difficult for banks to price at a level that can be accessed by startups. So I think what my bank has done is we've recently set up a microfinance company. It's fairly new, so probably not well known yet. We're just opening our doors right now. But we're hoping that that will help to address where the bank is lacking, to be able to offer products and services that are easily accessible to people, like I said, they're economically active, but they lack a critical thing, and that is access to finance. The level of banking penetration is pretty low because the market woman and the carpenter and people starting up will find banks really daunting to be able to approach them to discuss their financing needs. So we're hoping that this decision by the bank will be able to help address this critical gap. We've also learned that it's very important to educate customers. Capacity building is really lacking. A lot of people, they don't understand what is involved in bank financing and knowing their numbers, doing their books, the importance of documenting their plans. I'm sure a lot of businesses in Gambia, even large corporates, did not have a business continuity plan or some sort of a contingency plan to just help ride through pandemics or periods of crisis like this. So a lot of people are now really stuck with what do we do, how do we do it, how do we get out of this, what's going to be the future impact. So COVID-19 may just be the new normal for a lot of businesses, because we've all come to realize that there are lots of things we need to do better, we need to do differently. Even at us at the corporate level, we have realized that really better planning is going to be necessary going forward.
Thank you, Milan. Hussein Jab, just in the liquidity aspect of your maybe recommendation, what would you say?
Okay, I'll just make it very short because, as you said, we're running out of time.
I'm very sorry.
That's okay. Liquidity management, I think one of the biggest lessons we've learned is to really look deep and prioritize as to what is important, and this has forced us to tailor our reinvestments and what we do next. And because we've had to do a lot of cost cutting in anticipation of a downturn for the COVID-19, so we cut down certain costs that we thought were really gonna kill us, and they were gonna have a huge impact on the business. But what we saw was that we managed to get some of the same results with these costs removed as them being there. So the lesson for me there is that obviously this helps with the liquidity. We managed to cut down some very supposedly important costs, but we managed to still maintain almost 90% of the output in certain areas. So more critical looking as to what is a priority cost, and then knowing how to cut down costs efficiently so that you can maximize your liquidity. That's my answer to that.
Thank you. We will open now the questions coming from the audience. I will let Aliu maybe Aliu, if you can take the
Yes.
mic and ask them
Okay.
to our panelists.
Okay, thank you very much, Adrame. As I think very interesting conversations. Unfortunately, we are running out of time, but we have, I think, 3 questions that have come through the chat. Some of them I'll kind of rephrase in a bit, and I'll start with one that was posed by Jarai. I mean, generally, from what I can get from the question is, how can banks better support startups? I mean, Yilan, you mentioned that there are a lot of limitations that limit banks from being able to support, particularly startups, credit worthiness, lack of credit referencing. But I think picking at the point, I mean, all the people who are a bit familiar with banking know that commercial banking by nature is not really the most ideal source of funding for startups who are looking for long-term capital, growth capital. So the question I have is, the banks in Gambia, they hold a lot of capital. And Trust Bank, for example, is one of the few banks in the Gambia that is actually investing part of that capital in other subsidiaries, like you have BEBA, this microfinance company. The question I have, do you feel that banks can do more if it's to kind of support long-term financing for our startups, even if it means starting wholly new subsidiaries? That's the question I have for Jilan, following on from Jarai's question.
Okay, thank you. To answer that question, commercial banks in their current forms will find it very difficult to grant long-term financing to startups, because commercial banks fund lending through customer deposits. 90% of customer deposits in this country are demand deposits, meaning depositors can walk in at any minute and ask for their monies back.
So you can't do it.
The balance of 10%, which we call term deposit, is in fact not even much different, because it's the longest tenor is 1 year. And even at that, customers can come and ask for their monies back. So it's going to be very difficult to use short-term funding to finance long-term debt. But even at that, banks are trying now. My bank, we are currently giving 10-year mortgages. And this is anchored against demand deposits. But obviously, we have to control how much we can give, because creating an asset and liability mismatch is going to be bad for the bank, but in terms of interest rate risk and liquidity risk. And like I keep saying, these are depositors' funds, so we have to use them responsibly. So what we are doing, the Banking Act allows banks to use 25% of their capital to invest in subsidiaries that will not be as regulated as the banks are, and may be able to offer more to customers. And that is what we have done recently. So we have a subsidiary that does mortgage lending. It's called Home Finance Company. So they offer mortgages of up to 15 years, which we cannot do as a bank, but we can do through our subsidiary. Although the bank has started giving mortgages, like I said. We also have recently set up a microfinance that we hope will be able to really penetrate lower into society and offer access to banking to everybody, from the market woman to the farmers. In fact, our focus is on women and youths. So we feel that banks in their current forms may not be able to offer much assistance to startups, but by venturing into other areas, it will allow them a little more room to be able to help.
Thank you very much for Njila. I think this is a very interesting one, and we can see that in the chat.
I would please beg to interject and intercede on this question, because I think it's an unfair question to banks who take people's deposit, expecting that they will now turn around and put them into a high risk. In fact, startups are the highest risk asset class known to man today, commercially speaking. I wouldn't put my money in such a bank. And I do own shares in banks, as an example. Banks are expected to be conservative lenders, and that is why you go to them for percentile returns. You go to a bank, you don't expect to get 2x or 3x or 4x of your money. You expect to get a % increase year on year, steady growth. And the way I say it to people is just give your money to the bank, and once every 10 years, it'll double. The challenge with startups is we do it much faster than 10 years. Sorry about that, Ali. Please go ahead.
Actually, I think that was very good that you interjected, because I think this is a thing that is coming up in the chat, where a lot of the questions we're having are, how come banks are not supporting startups, et cetera, et cetera. And I think that's a very, I think you've made the point, which is reinforces what Jilan has said. Banks are not positioned for that. That is one of the things that, for example, one of the places that GAIN is hoping to make an impact, where we can attract people who are prepared to take risk, longer term risk on our startups, et cetera. So I think that's a very, very good point that is good to clear up. The next question I'm going to have, I think it was one that is similar to one that was raised by Aliou Bey, when he talked on what are businesses doing to build their risk management and to plan better in terms of liquidity going forward, liquidity management. And this, again, I think is a question that I would kind of, it seems to be directed at Njilan, the banker, because it ties into the point on what can banks do in terms of capacity building and training for some of the companies that they have. So Njilan, any plans, COVID-19, you mentioned that one of the challenges that you have is that a lot of the companies you see have a number of limitations, and that you feel that maybe there's more that can be done in terms of capacity building. So do you see any programs coming in future that are going to be geared towards supporting SMEs in that regard from the bank?
Yeah. Yes, definitely. Yes, I see that happening. In fact, it's part of our program for our new microfinance. Capacity building is one of the we're really focusing on, because we believe that people need to be more enlightened about finance, access to finance, and helping their businesses survive. Entrepreneurs, Gambian entrepreneurs, don't know their numbers. We say that all the time. They don't. That's why they run into difficulties very quickly. The level of startup failures is quite high, simply because they have good ideas, they have good plans, but they don't know how to put those numbers together to make sure that their businesses are successful. So we're doing it on a one-to-one basis right now. So we have our account officers trained on these things, and they're giving one-to-one support to customers. But definitely I can see us being leading the way in doing this on a larger scale, especially through our microfinance.
I mean, Badu, can I just come in here to
please do
mention that, especially for folks that are not Gambian, it is important to understand all these questions coming through. It's a historical perspective, because remember, up to 3 years ago, I mean, the Angel Investment Network, Badu, this is something very new in this country. We've lived under a dictatorship for 17 years. 22 years, of course. For me, it's 17 in my business. So I want to really put to the audience that we don't have a culture of lending other than the banks. Equity is non-existent. Angel investment is fairly new. You can point to the number of things that have been done. So everybody looks to the bank. And I think it's a bit unfair, because, as our colleague has just said, you know, any bank that is using depositors' funds to do startups, you need to look at that bank again, because by nature, their focus is, you know, profit-oriented. Depositors' funds add margins and get money in return. And right now, across West Africa, what I've seen is, in Gambia, the central bank has written to the commercial banks to tell them that they should not pay dividends. So you can imagine your investment today cannot get you any return because of a rule from the central bank. They want the banks to remain, have good liquidity and things of that sort. So I really believe that as a country, you know, COVID-19 also has a negative effect on where we should have been going. Because remember, if you Google Gambia over the last 20 years, it's just negative stuff you have in Gambia. You know, human rights abuses, companies being driven away, things of that sort. So over the past 3 years, we've had the opportunity to travel with the government and all that to Brussels and things of that sort. The whole idea was to rebrand Gambia, foreign direct investment. People would see Gambia as a country to come and invest. Equity funds would come in, things of that sort. We haven't reached there yet. And of course, you have COVID also. So most of the questions I'm seeing are still tilted to the banks. So my opinion is, until we have alternative sources of funding, you know, Gilan has talked about the microfinance institutions, but I personally believe that's not also for startups, because the interest rates used to be higher than the commercial banks from my experience. I'm not sure if that is the case now. So I really believe that alternative sources of funding need to come in, equity funds need to come in. But like I keep saying, for a country that is not known for attracting investment, I asked the guys at JIPA, you know, even during a democracy last year, how many special investment certificates have you given out? And between me and you, you know, it was single digits, 1 or 2. When even during a dictatorship, we had more foreign direct investment. We can debate where the blame comes from, but I think what I'm trying to put across here is the opportunities for startups and even SMEs to a certain extent to get good funding, long-term tenure, is not a commercial bank function. And I think until we address that,
that's correct,
you know, like other countries do, you know, these are the questions we keep sending to the banks, when really it is not the bank's fault, because their business model is not geared to these types of businesses. I hope I make sense.
Thank you. Thank you very much, Papa. I think very, very, very interesting. And I think what you've just done, you've just validated the need for gain and explained the reason what gain is looking to achieve. Because I think what is material here is we need to do a lot in changing mindsets and educating people. And gain is just one level in helping in that regard. Unfortunately, we are running out of time. We have some interesting questions. I think Khalifa also wanted to make a point to support from his experience. This particular point on, but I'm not too sure whether time would allow for us to take any further questions, because we have 3 minutes, I believe. So what I'll do is I'll hand over back to Adrame, and I think maybe some of these questions that I mentioned, what we'll do is we're taking a note of them, and we'll forward them to our panelists, and they will be able to share them via email to just the questions that you have. So this is for Poncelet in particular. If you can't address your questions, we'll forward it to the panelists, and then we'll try and share with you via email. So Adrame, please, back over to you.
I think for the, I mean, we still have 2 minutes. Unfortunately, we cannot keep our panelists and also the audience more, but I think if we just can take 2 minutes, ask the question, Khalifa, if you can give your point in 1 minute, and then we close the session.
Okay, I just want to speak from the perspective of those that are asking the questions. And why? Because I have been there before. As a young entrepreneur, I've started a business that, my ISP business, but I had no money. And what Pap has mentioned is that we have a culture of just going to the banks to lend to start businesses. For me, I said, I want to think differently. I want to do things differently. How can I build this business, make it attractive such that it is investor ready? And I did that, and that's how, you know, it got to a venture capital firm in Senegal, who also helped a lot in, you know, molding the business into something that is more attractive for an international corporation like Orange to come in. So that is the type of culture that we need to promote, because going to the bank, you know, in case of any adversity, you lose everything. So you should be willing to give up something to be able to get the finances you need. I don't have, you know, X millions of dollars to start to invest in a startup, but I partnered with someone that actually has the capacity and has the finances to do it. And I don't have to be indebted, but I still maintain shares that can help me as an entrepreneur to grow. That's all I wanted to add.
Thank you, Khalifa. I think it was quite short, so we still have 1 minute. So before we close, I would just like to ask to our panelists, each of them, just to share 2 words, 1 sentence, very short, in what do you leave to this young generation, to these young entrepreneurs? We have more questions, we had more questions, but unfortunately time is limited. So just in few words, a closing remark, please. Maybe Papa Yusufa, you can start with you. Your mic is open.
All right, I'll keep it short. I'm a very optimistic person, so I'd say optimism, faith, hope, and stay alive. Everything is possible.
Okay. Daraja, Adi?
I'd just like to say that the game has changed right now, and I think everyone has to adapt. The important thing now is to figure out how to stay relevant when there has been such a fundamental change in the whole world, and adjusting to the new normal, basically. So I think small businesses really reanalyze their businesses and look at how to adapt and how to adjust and think outside of the box to make sure that their businesses stay above float post COVID-19.
Milan? Very short word.
Yes, yes, very short. Apart from saying stay safe to everybody, for our startups and young entrepreneurs, all I can say is you need to be able to seek the help that you need so that you can plan your businesses properly. If you fail to plan, it means you're planning to fail, and that would be bad.
Thank you. Hussein Jab?
I'll just leave mine with a famous quote that I like. It says, "Our greatest glory is not in never falling, but in rising every time we fall." Any situation can be turned around. Every failure can be a lesson. So we learn from this, we get up, we move on stronger, and the sky is always the limit. So that's mine.
Khalifa?
I would say be dynamic as an entrepreneur. Always be ready to face adversities and know how to use your network to be able to get out of certain adversities, using your financing partners, your suppliers, your clients. Just be innovative and then you come out of this stronger. And stay safe.
Thank you. Tommy, for the last word.
Well, I think the panelists have said it all. I just wish everybody well. Well, one thing I will address very, very quickly is this startup SME, because I see there's been a question or two about it. And really the big difference is around three critical areas. Startups grow very, very quickly. So if your revenue is growing 10 to 15% month on month for 6 months, then you're probably onto a startup. The second is around funding, and you've just heard, startups cannot get money from banks. It's criminal for a bank to put money in startups simply because of the risk profile. But you have angel investors and other people who understand the nature of that risk and are prepared to mitigate and manage that risk. That's why we have angel investors. So long may the Gambian Angel Investor Network reign. I hope you guys grow and do deals. And the third and final, to bring it home, is as a startup, once you talk to investors, they're talking about exits. As an SME, you don't talk about exits. Terminal planning is not part of, is not part of a SME. It's a fundamental part of startups. So I hope that helps. Have a great one, and thank you for having me.
Thank you so much to everyone. I think it was a great panel, and we are seeing it on the chat box, the comments. Thank you for this time, for your time, and hopefully to see you again in other webinars in our different activities. We are hosting a few webinars in the next few days, weeks coming in different subjects, always linked to investment, liquidity management, startups, SMEs. And as Aliu mentioned, and I think few panelists mentioned also, we GAIN is maybe one of the first equity equity investment organization. We don't invest, GAIN, the structure won't invest, but we have people in this structure. And also we are partnering with regional, I think it's important to know, we are partnering with some regional investment firms from Senegal and from other countries that are interested in investing professionally in businesses in the Gambia, and not just small businesses. Tickets can be a bit high. So so we are trying to make the equity landscape in the Gambia quite dynamic. So thank you all. Thank you for being here, and see you next time.
And just to mention, thank you very, very much, Adrame, a very able moderator with a French touch as well. And the recording will be shared with all of you, and we look forward to welcome you back again in our future webinars as well. Thank you very, very much to everyone on our panelists.
Thank you. Bye.
Bye-bye.